the financial centers of the world. This is Bloomberg Markets with Alix Steel and Guy Johnson.
It's 30 minutes into the U.S. trading day on Monday, February 7th. Here are the top market stories we are following for you at this hour. Sovereign sell-off. The global bond rout continues on both sides of the Atlantic as traders brace for more aggressive central bank tightening. We'll hear from the ECB's Christine Lagarde later this hour. Deterrence and diplomacy. Ukraine is front and center as President Biden meets with Germany's Olaf Scholz at the White House today, while France's Emmanuel Macron is in Moscow for talks with Vladimir Putin. And pedal to the metal, Peloton shares surging on reports the company has attracted takeover interest. Its 80% drop from record highs may make the price attractive, but analysts are skeptical about a potential deal. From New York, I'm Kaylee Lyons with Guy Johnson in London. Alix Steel is off today. Welcome to Bloomberg Markets. Guy, it's a new week. Let's hope it's a little less crazy than the previous two.
I'm not sure it started that way, Kaylee. It feels very much like a continuation of what we were talking about Friday. We're going to hear from Christine Lagarde a little bit later on. We've got, as you say, sovereign bond markets firmly in focus. The question of the day is a fairly straightforward one. Who's in charge? Who's driving this narrative? Is it the central banks or is it the markets? But I think it needs to be a little bit more nuanced than that. I think it needs to be which markets and then which jurisdictions, because I think if you're looking at Europe, for instance, I think the govie market is more important, certainly when you look at what is happening on the peripheral markets. But credit on both sides of the Atlantic, I think, is absolutely front and center here and now starting to react. And I think the credit channel is certainly going to be very important for the Fed, less so maybe over here in Europe where the bank channel certainly dominates. So let's kick this around a little bit. Let's try and figure out exactly what's going to happen and maybe set ourselves up for another interesting week. Christine Aquino joining us, as is Bloomberg's Vince Signorella. Christine, let me start with you and let me pose that question to you. Central banks in charge or markets are in charge? And if we're talking about markets, which markets?
Well, Guy, I think it's very much markets in charge, and specifically the short end of the market is the part of the market that's pricing in all these rate hikes. We've seen this time and time again push central banks into a corner and getting them to respond to it. We definitely got that from the ECB and BOE last week. Definitely more aligned with the markets when it comes to a more hawkish sort of path for policy moving forward. And, that's filtering through to the rest of the markets today, particularly in the periphery where we're seeing Italy and Greece under fire specifically today because of the aftermath of the ECB shift to a more hawkish regime, for instance.
All right, Vince, do you agree with that take? And if so, where else are you seeing it other than the bond market?
Yeah, I totally agree with what Christine is saying. And thankfully, it is the markets leading. Central banks, when central banks lead, we tend to see mistakes because their forecasts, unfortunately, are not very good. And we've seen this before with the Fed where they raised 4 times, only months later to have to cut 4 times. Because they anticipated too much inflation and then growth slowed and they had to come back and ease again. I think this is really positive that the markets are leading. What I would hate to see is March, the Fed raised by 50 basis points to try to take back control of the market. They don't really need to do that. They can follow along nicely. And I think, as you said, where we're seeing it is mostly, as Christine said, the front end of the curve. We're seeing some flattening. I'd expect to see flattening continue. And we're only seeing about 45 basis points in 5s, 30s. I think that can shrink even a little bit more as the shorter end really needs to price in the Fed. The back end that right now doesn't need to be that aggressive.
Vince, the critical channel for the Fed to watch is the credit channel. Thus far, we haven't seen that much impact into the credit channel. We're starting to see it show up now. Is that something the Fed, to your point, is going to have to lean in on? You say you'd hate to see them have to go 50 just to try and regain the narrative. But if the credit market starts to crack, will the Fed be in a position where it needs to take a different course of action?
Well, I mean, hopefully the crack will be a small crack. There's obviously would be some expectation that the credit markets will suffer a touch as rates go higher and people step back looking for higher yields, more attractive maturities, et cetera, to step in. But I think the credit market's going to hold up just fine. I think there's, even if rates back up a little bit, put a little pressure on credit, there are going to be some very attractive yields in that market to attract investors, especially as we see treasuries, I think, lagging a little bit at this point. We've had a huge move in 10 years up above 1.9%. I don't feel like that has a lot more to go at this point. 210 perhaps, but when you start to see taxable munis start to rates show up very attractive credit, the corporate bond market shows some attractive credit. I think that will bring investors to the market and keep the credit markets in balance.
All right, Christine, on that point of relative attractiveness, how much higher can yields go before they actually start to spell trouble for the equity market and maybe call TINA into question?
Well, Kaylee, that is the big question, isn't it? I mean, we have seen, for instance, earlier this year being thrown around levels around 2% for 10-year Treasury yields as a potential pain point for tech stocks in particular, which we saw did bear the brunt of the earlier sell-off in the equity market. But, we're heading towards levels that could get past that 2% mark. And so I think it is a question of what's the trade-off, in terms of how much further yields could go in above, for instance, earnings yield or other metrics that equity investors tend to look at when trying to make that decision between whether they're going to go for equity still or whether they're going to go for bonds. And so that's going to be definitely one to watch out for, and potentially something that we could see as soon as the next couple of weeks if this sort of price action continues.
Okay, Christine. The other Christine Lagarde, the president of the ECB, is going to be talking at the top of this hour. She's going to be delivering testimony to the European Parliament, taking Q&A. Does she push back? Does she change the narrative? Does she try and push the markets after today's price action in BTPs and Greek bonds? Does she try and push back this idea that the pivot at the ECB is now underway? Does she talk about spreads? She's on really dangerous ground here. Do you think she goes there?
Well, Guy, I think that's what markets are going to be watching out for sure. I mean, we have seen a tendency from the ECB to, especially in the aftermath of a big rate decision, such as the one that we saw last week, to add some nuance to the messaging in the weeks after that. And so that's definitely what we're going to be watching out for. How much of a pushback is she going to mount against the price action that we're seeing in markets, and whether she will acknowledge the spread? We have seen her time and time again do this to some mixed degrees of success, shall we say. It is quite a tricky communication challenge, especially when bets at the moment are at these levels.
All right, well, we'll wait and see how she handles this in less than 40 minutes' time. Thank you so much to Bloomberg's Christine Aquino, as well as Vincent Signorella. Now, coming up, we'll continue this conversation, talk about treasuries joining this global bond market rout. We'll discuss with Katrina Dudley, an investment strategist and portfolio manager at Franklin Mutual Advisors. This is Bloomberg.
Let's check in on the Bloomberg First Word News. I'm Ruchika Gupta. Russia's Vladimir Putin and France's President Emmanuel Macron are meeting today in Moscow. The Kremlin says the talks will be substantive, but it doesn't expect a breakthrough. Russia has repeatedly denied that it plans to attack Ukraine. The US and the UK say there are now almost 130,000 Russian troops close to the Ukrainian border. A state of emergency has been declared in Canada's capital over a protest against vaccine mandates and COVID restrictions. Hundreds of trucks have been parked in downtown Ottawa near the Canadian Parliament. The city's mayor says that increasingly rowdy demonstrations pose a threat to safety and security of residents. Former New York Governor Andrew Cuomo isn't ruling out another run for the public office, but he says it's too soon to talk about it. Cuomo spoke to Bloomberg 5 months after he resigned over a swell of sexual harassment allegations. He says there were serious mistakes made by New York Attorney General Letitia James and the lawyers who investigated claims against him. James's office says no one can dispute the fact that the investigations found allegations of sexual harassment against Cuomo to be credible. Global News 24 hours a day On air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Kaylee.
Ritika, thank you. Let's get back to the markets now, because that worldwide rout in the bond market is expanding today, and now treasuries are among the bonds that are falling. That brings us to our question of the day. We basically want to know, who is in charge here? Is it central banks that are leading, or are they just following the markets that are actually in the lead? Joining us now to hopefully help us answer that question is Katrina Dudley, Franklin Mutual Advisors investment strategist and portfolio manager. Katrina, is this a market that is front-running what central banks are doing, and central banks are basically just adapting to it? What do you think?
Look, there's a feedback mechanism that exists between the markets and the bond markets, equity and bonds. And I think what you've got is a couple of things going on. First of all, Christine Lagarde is responding to the fact that she's got to be very careful in her hawkish comments, because they don't want to have another tantrum like we did about a year ago, when your comments about rising yields in Europe caused the Italian markets to blow out. And you have a nascent kind of government there and a recovery. So I think that they're focusing on that transmission mechanism, as opposed to looking at how bond markets and equity markets are linked. The second thing, though, I think is going to be very interesting, is that the typical link that we see between treasury and bond yields and inflation, we're a little concerned that that may not actually come into play this time, given the fact that you've got a federal government that really wants to spend money. And normally you get deflation or a tightening of inflation conditions when the federal government tightens. And at this time, the US is really trying to spend its way out of this. So we may not necessarily have the transmission mechanism that the Fed is hoping for.
Can you just sort of expand on that a little bit? What are the implications for the various asset classes if that's the case?
Well, the first thing is that we're looking at inflation in the US, and we have been very, very surprised at how high it is. And it's now not just high as noticed by equity markets, it's high inflation as noticed by people on the streets. How does that impact equity markets? It makes products more expensive. Normally, when you have expectations of products being more expensive, people tend to buy today instead of deferring consumption. But at this stage, because people really don't have a lot of pent-up demand, particularly for home goods and capital goods, I think that we're not necessarily going to see that acceleration. So we're a little cautious in some of the areas of the market where you need demand to continue to be strong, and inflation could actually retard that.
Where does that put U.S. equities relative to, say, European ones, Katrina?
I've been a European fund manager for my entire career. I now do global as well. And I think I've always had a positive bias on Europe. And I think this time I'm actually really confident in that positive bias. First of all, let's take a look at valuations. The European market is cheaper. We can go into specific sectors where there's even better opportunities in the European market than, say, the US market. Secondly, you have that recovery fund that was passed well over a year ago, and it's finally going to come into GDP. And then on the inflation front, the real drivers of inflation that exist in the United States are just not present in Europe. So you don't have such the wage pressure that you have in the United States. You don't have the same pressure from the owner-occupied housing, which isn't actually in European inflation markets. And the bump in energy prices, which is in inflation, is really a transitory impact. So I think the setup for Europe this year is really good.
Katrina, the outperformers thus far this year certainly include the banks. I've got the names on the screen right now. Sabadell, 43% to the upside. CaixaBank, 33%. Bank of Ireland, 30%. Commerzbank's up 28%. These are big moves that have already been made already. And I'm also wondering whether some of the peripheral banks in particular are going to be able to manage higher yields. The Italian banks in particular own an awful lot of BTPs, I think circa 800 billion. If we do see yields gapping higher, do you really want to own those institutions?
You talk about the bounces off the bottom, but I think some of those bottoms were artificially low. So you've really kind of got to look at where the stocks are on an average basis. So I think that upside isn't quite so great. The second thing is the setup for European banks is really positive this year. They're actually going to be in the market now paying dividends and potentially buying back shares. That's very different to what they've been in the past. They've also upgraded the quality of the balance sheet. So while you talk about the Italians, which have some issues with their balance sheet, a lot of the other banks have really high quality balance sheets. Finally, if you look at valuations, the stocks trade at 9-10 times earnings, which is a significant discount to their US peers. US peers are reflecting the returns in their multiples of earnings that they're trading at. The Europeans are not. And you're getting these assets at discounts to book value. And with returns that are going to be greater than the cost of capital, I think the setup, despite the moves off the bottom, is really positive.
On the subject of valuations, Katrina, how high a multiple are you willing to pay to own a stock in this environment?
I'm a value investor, so I like cheap multiples. We don't tend to buy companies that are trading at 100 times earnings, 100 or 10 times revenues. I think in terms of looking at that multiple, the bond yields do come into play here, and that is the pressure that you're seeing on growth stocks. The question is, you really need to take that long-term look and have a look at what the cash flow of these businesses are going to be, because that takes out the multiple equation. Multiples are very, very sensitive. Cash flow is something you can elongate and look at, and you can test those sensitivities. Finally, a lot of these tech companies are not levered, so they're not going to see a higher cost in terms of higher interest rates from the rising rates. They're just seeing it, as I said, in terms of the discounting of those future cash flows.
Katrina, do I need to include some geopolitical risk into my European positions when I think about them? We don't know what's going to happen in Ukraine, but if things take a turn for a worse, we could see significant energy price escalation even from here. We've already seen one bout of this. We could get another. European industrials are very exposed to this.
Yes, they are exposed to it. I think that you've got a lot of geopolitical tension, and trying to predict what Putin is going to do is it's just a quandary that we don't really know what's going to happen. The fact is, however, is a lot of these European companies don't just sell their products into Europe. They sell their products into the United States. They're also very exposed to China, which has just stimulated its economy. So even though you have some of these headwinds, I think that they've got some very good growth prospects. The second thing, if they do see rising energy costs, you just want to be in those industrials that can pass it on through pricing power, because it's the same way when we look at the US industrials. We're looking for companies that have got strong market position, monopolies, which basically give them that pricing power, because that is the ability to cope with any type of inflation in costs, be it energy, wages, or the like.
Katrina, we just had a viewer writing in on IB on the Bloomberg terminal asking about those European banks. What kind of risk premium do you incorporate on the corporate governance side, given that there's always a constant barrage of headlines about turmoil in the C-suites and at the high levels of some of these banks?
Yes, you've seen it at Credit Suisse. Obviously, you've seen it at Deutsche Bank and everything. The fact is, you can look at it negatively, the way that you're talking about needing to incorporate a higher risk premium, or you could take a positive stance, is that they are now realizing that governance is very important to the investor base, not just in the US, but also in Europe. And this is a real call to action. I think in the Credit Suisse case, you could potentially say that they've taken the COVID violations seriously, and they've implemented, their policy. Probably in the past, you may have had some of these type of things swept under the carpet, but now the banks are acting positively. So I think if I look at it versus even 10 years ago, that risk premium should be lower, because they're a lot more proactive, particularly on the governance front.
Really useful insight, Katrina. Thank you so much for joining us today. We greatly appreciate it. Katrina Dudley of Franklin Mutual Advisors. Thank you. Right, what are we going to be doing next? Shares in Peloton up sharply today. The fitness company is said to be exploring takeover options. A couple of big names being mentioned as potential acquirers. Nike's one of them. I'm hearing Apple being talked about. Amazon maybe in the mix as well. We'll talk about all of this next. This is Bloomberg.
It's time for the Bloomberg Business Flash, a look at some of the biggest business stories in the news right now. Frontier Airlines has agreed to buy Spirit in a takeover that combines two of the U.S.'s bargain carriers. The price, $2.9 billion in cash and stock. The private equity firm Indigo Partners owns a majority stake in Frontier and is the largest shareholder in Hungary's Wizz Air. Shares of Peloton are soaring today. The company is said to be exploring takeover options. There are also reports that Amazon and Nike are both considering making offers. Before today, Peloton stock had fallen more than 80% from the high a year ago. And that's your Business Flash Guy.
Okay, Kaylee, let's pick up and talk about that last story. It's probably worth focusing a little bit more on it, given the share price move that we're seeing. Amin Ben Saeed, who covers the company for Bloomberg Intelligence, joins us now to give us a take. I mean, the share price is down so much, at some point we were definitely going to be talking about potential takeovers. I've got the Journal talking about Amazon. I think I've got the FT talking about Nike. I think Wedbush is talking about Apple. How credible is this idea that we could see a takeover here?
Thanks very much. So it's a very good question because when we look at Peloton share structure, first of all, if Peloton doesn't want to be sold, it's not going to happen, because when you look at their share ownership, Class B shares have around 66% ownership for the whole for the voting rights, basically. But to your point, it looks like maybe fitness apparels or companies who want to have that premium fitness experience could be better fit. It's still hard to say at this point of time if tech players could be a good fit, but we will have to see how that how that extends.
Okay, but on the subject of those tech players, I mean, we know that they are subject to a certain degree of regulatory scrutiny as well. How much could that be an issue here if someone were to pursue an acquisition?
It's still early to say, but since Peloton's market cap has relatively, as you guys mentioned earlier, significantly declined since the heights of the pandemics. In addition to that, a lot of the tech players, their fitness platforms are still relatively small, and even acquiring Peloton, it doesn't look like it will put them to a level where it could raise some regulatory issues there. But again, it's still early to say. So far, it doesn't look like it might be a significant challenge.
I mean, let's just talk about kind of where Peloton is in its journey. Clearly, it was a lockdown darling, and the stock price maybe got ahead of itself. We're now getting a kind of opposite and equal reaction to that, so the shares are down very hard. But how big could this space be? What is the opportunity if this business stays as a standalone?
Yeah, so the US fitness revenue is around 30 billion. Has been growing relatively stable, of course, pre-pandemic. Looking at Peloton more specifically, that is the focus, or that is where the TAM could be. The issue that they have is, of course, as you mentioned, they benefited from the pandemic. They had significant pull forward, but now they have more supply than demand, unfortunately. So cardio platforms, they're doing relatively well, especially with treadmills and bikes. But when you go outside of that, there is not that many other fitness verticals or other products that they have. So maybe strength or things of that sort could help them, boost their growth numbers.
All right, thank you so much for your input on this. Amin Ben Saeed of Bloomberg Intelligence, appreciate your time. Peloton shares up 22% with it about an hour into the U.S. trading session. Now, coming up, we'll get back to geopolitics because the new Chancellor of Germany, Olaf Scholz, has started a round of diplomacy in the midst of crisis talks over Ukraine. His first stop is the White House, and we'll talk with the former U.S. ambassador to Germany, John Emerson, next. This is Bloomberg. We're an hour into the U.S. trading session, and Bloomberg's Abigail Doolittle is tracking the move. So, Abigail, it's a new week. I don't want to speak too soon, but it looks a little calmer out there than it did last week.
It does look a little calmer, but I wanted to set the stage and show what we're coming out of, because, of course, this year has been all about volatility, big moves up and down on the days and on an intraday basis. Net at this point, you have the S&P 500 basically down about 5% down in a big way, up that intraday volatility. But to Kaylee's point today, the moves are much smaller. The Dow, the last time I looked, was slightly lower, the S&P 500 slightly higher. As for the NASDAQ 100 and some of those tech indexes, the last time I looked, we saw gains, yes, for the NASDAQ 100 up about 0.4%. The SOX, the chip index, up a little bit more. But there are some divergences because you can see the NYSE Plus FANG index, it is down about 0.6%. That has everything to do with its roughly 20% weighting to China tech ADRs. Alibaba in particular is down sharply. This divergence is true too for U.S. mega caps. Alphabet and Amazon, both actually Amazon and Tesla higher. Tesla off of its highs. Earlier it had been up about more than 1%, but you can see Amazon still in that strong quarter glow, up 2.5%. To the downside, though, we still have Meta Platforms down after the not so great quarter follow through, and Netflix down 2.1%. So we have this divergence of haves and have-nots within mega cap. But the big macro influence, of course, that has to do with rates, Guy. If we take a look at the 10-year yield, recently at its highest level since late 2019, early 2020. Overall, it's a choppy uptrend, but it is an uptrend. Higher, higher, higher. It looks like 2% is not so far away. If that should happen, and again, it looks like it will, how will big tech digest that big round number? Perhaps we'll find out sooner rather than later, Guy.
Absolutely. The rate of change really impressive right now. Bonds certainly the story over here in Europe. Remember, we're counting you down to Christine Lagarde, the president of the ECB, talking in front of the European Parliament at the top of the hour. Let's stay with the European focus. Germany's new Chancellor, Olaf Scholz, very much under pressure. The idea is he needs to take a position on Russia and its military buildup on the border of Ukraine. He gets a chance today maybe to do that. He is going to be meeting President Biden at the White House. Joining us now, Bloomberg's Joe Matthew from D.C. Joe, what is the White House hoping for, expecting from this meeting with the German Chancellor?
It's all about unity today, Guy. Presenting a unified front. The White House has scheduled just under 2 hours for the two leaders to meet in the Oval Office. That will be followed by a news conference, a joint news conference in the East Room. A lot of questions to be asked here, Guy. We're going to be looking for answers, and Bloomberg will be in the room, specifically to Nord Stream 2 and how Scholz comes down on this with regard to any potential sanctions that could be imposed. Look, you know as well that there have been a lot of questions about Germany's resolve when it comes to protecting Ukraine in dealing with Russia. Scholz sat for an interview with the Washington Post ahead of this visit today, pledging a united and decisive response to any invasion by Russia. Happening at the same time as French President Emmanuel Macron meets today in Moscow with Vladimir Putin. As these conversations continue, Guy, a series of talks underway at diffusing tensions and avoiding an invasion that we should note Russia to this day claims it is not planning. Guy?
Joe, is the U.S. and France on the same page? Obviously, there's some issues in particular with Germany in regard to energy flows, but we know President Biden spoke with Macron yesterday on the phone before that meeting in Moscow. How much are they aligned?
They seem to be, for the most part, but we have to remember that these talks are happening against the backdrop of the U.S. trying to locate more gas, liquefied natural gas from our allies that could be sent as an alternative, if you will, to Europe in the midst of this winter if Russia decided to shut this off. But this is, an interesting decentralization of talks. The U.S. has decided to let Macron go ahead with his own tact, with Scholz and his own tact, the EU and NATO with their own. So not all of the burden is on this White House.
All right. Thank you so much to Bloomberg's Joe Matthew in D.C. covering what is happening at the White House today for us. And we also want to pay attention to what is happening in Moscow, which Joe mentioned. French President Emmanuel Macron is meeting with Vladimir Putin. We actually have some images of that. That meeting has just begun, and we are expecting these two to hold a joint news conference later on today. Again, Vladimir Putin and Emmanuel Macron meeting in Moscow. But we want to focus more on the particular conversation when it comes to the U.S. and Germany. And joining us now is John Emerson, chairman of the American Council on Germany and a former U.S. ambassador to Germany. Ambassador, thank you so much for your time. Germany obviously is in a very vulnerable place when it comes to Russia in particular, given its reliance on the energy, Nord Stream 2, et cetera. Can it be a reliable partner in the Western alliance given that?
Oh, no question about it. And in fact, Germany has been a reliable partner for literally decades, including through at least the western part of Germany and including through the entire Cold War period. There's probably no more important relationship for Germany than that with the United States. They talk about the transatlantic relationship. That means the relationship with the United States. And while Germany, and certainly Chancellor Scholz, has his own politics to deal with internally, There are certainly differences within Germany in terms of attitude towards Russia. There's obviously the energy concerns. At the end of the day, I have no doubt that that Germany will do everything it can to make sure that the European response to Russian aggression is very close to and consistent with the American response.
Ambassador, as we watch this playback of the meeting between Emmanuel Macron and Vladimir Putin, who is leading that European diplomatic charge? Who is in charge of the charge? Is it Olaf Scholz or is it Emmanuel Macron?
Well, you know, it's interesting. I perked up when I heard your reporter talk about the fact that you've got multiple fronts going here, because I think that is what happened. Look, I was ambassador in 2013, 2014, 2015 when the whole Russia-Ukraine war started, actually back in 2014. And it was pretty clear it was Angela Merkel who was in charge. I mean, she's the one who sort of traveled around Europe, pulling together the member states of the EU, making sure they were consistent in terms of the imposition of sanctions. She led the Normandy process, which was France, Germany, Poroshenko from Ukraine, and of course Putin from Russia, to try to find a diplomatic solution to this crisis. Obviously, we don't have Angela Merkel anymore, and Macron has his presence. He's up for re-election himself this year. Olaf Scholz has come in relatively new. He's not wet behind the ears. He was vice chancellor in the last 4 years of the Merkel government, and he was finance minister, which is in many views the second most powerful position in the German government. So he's certainly someone with a lot of experience, but it's a different thing than what we had before. So yeah, I think the United States is being smart in allowing multiple points of contact with Vladimir Putin and multiple pressure points to try to get this thing to not move on to an invasion.
Other than Angela Merkel not being involved this time around, I'm wondering what else is critically different than in 2014 and why now, 8 years later, you think Vladimir Putin thinks it's a time where he might be able to make a move like this?
Well, I mean, I think he's looking at I guess there's several things. Number one, he's obviously looking at a change in government in Germany, Macron running for re-election, and there's been a lot of change and transition, and so maybe there's an opportunity there. Secondly, what Putin probably wants more than anything else is for Ukraine to be unstable and not to move closer to the West. And President Zelensky has been, sort of flirting with the idea of moving to the West. Remember when this first started in 2014? It was, it was when Yanukovych fled Ukraine. You had the protests on the Maidan, and Putin was afraid that, in fact, there'd be a populist revolt within Ukraine and that they would move closer to the West and to Europe and the EU. And that's when he came in and seized Crimea and went into the Donbass. So there's a fear, I think, that Ukraine, again, is moving farther away from Russia, in part because Ukrainians are angry with the policy Russia has pursued vis-a-vis Ukraine in the last, 7-8 years. And he wants that to stop. So this sort of threatening behavior, coupled with the change in governments, I think provides him an opportunity to try to put his foot down.
We started this conversation with you reiterating the idea, Ambassador, that Germany is a reliable partner. But there are certain things that speak against that, maybe from a US point of view. The Germans, and there's a historical context here, are very wary of providing kinetic weaponry to the Ukrainians to deal with this threat. We also have German businessmen carrying on conversations with Vladimir Putin. We saw a meeting only a few days ago. Germany is shutting down its nuclear reactors. Therefore, it is more exposed to German gas, maybe to Russian gas, maybe more than it's ever been. Is Germany really capable of picking sides here? The US clearly has. Is Germany capable of making that decision as well?
Well, of course they are, but Germany's interests are broader and different vis-a-vis Russia than the U.S. There's no question about it. And let's not forget that a a third of the country geographically and about 25% of the country from a population standpoint, instead of growing up learning English, becoming friends with the sons and daughters of American servicemen and women, had the same experience with Russia. They learned Russia as kids. Angela Merkel learned Russia as a school girl. And so there is obviously connection to Russia. I don't necessarily buy this, oh, they're completely dependent upon Russia for their oil and gas. They're dependent upon Russia for cheap oil and gas. It would obviously be more expensive for them to move in another direction. But don't forget, I'll tell you something else that's changed, is you have the Greens in the government now. And the Green Party is pretty tough on Russia, and they certainly are not in favor of Nord Stream 2, in part because of its reliance on it allows for continued reliance on fossil fuels. So, and historically, Germany has always been reticent to provide lethal aid to anyone. They broke that when they provided lethal aid to the Peshmerga, the Kurdish Peshmerga, in the effort to go after ISIS, which we were very grateful to see happening. But the fact that they aren't providing lethal aid, which I think we accept, our government accepts, is different from only providing 5,000 helmets. I think that's a little light, if you will. And there's plenty of aid and assistance they can give to Ukraine above and beyond that doesn't amount to, sending in tanks or Javelin missiles.
Well, Ambassador, we actually are getting some headlines from Annalena Baerbock, the German foreign minister, who is meeting with her Ukrainian counterpart, and she says she will do everything to prevent further escalation and that Russia will pay a high economic price with escalation, saying the ball is in Moscow's court on the Ukraine conflict. We actually were speaking earlier on Bloomberg Television with Jeff Curry of Goldman Sachs about the prospect of energy flows being entirely disrupted. And he says that's unlikely because it's mutually assured destruction in that Germany needs the energy flows on the supply side, Russia needs it on the demand side. If this conflict were to escalate and you did see those energy flows disrupted, is it ultimately more of a problem for Germany on the receiving end or for Russia?
No. Germany has a multifaceted economy. They have the capability to go out in energy markets and supply or meet their energy needs. Russia's a one-trick pony. If they ain't selling oil and gas, there's not a whole lot they can sell that the rest of the world wants to buy. And so maybe they become more reliant on China, much more reliant than they would want to. The last time this happened, China cut a pretty good deal from China's standpoint for oil and gas from Russia. So, no, I would actually say, of course, it would be painful for everyone, but I would say that the odds are a bit more certainly maybe a lot more in Germany's favor in terms of being able to weather the economic consequences of something like this.
We will continue to monitor the Annalena Baerbock press conference, which is happening in Kiev right now. You can see those pictures on the screen in front of you and bring you the headlines from them. John, greatly appreciate your time today. Thank you very much indeed. John Emerson, former U.S. ambassador to Germany. Thank you, sir. What are we going to be doing next? We're awaiting ECB President Christine Lagarde. She is delivering testimony and answering questions before the European Parliament today. It's the first time we've heard from her, of course, since last week. That press conference, that now famous press conference in Frankfurt, where she refused to rule out a rate hike this year. Klaus Knott from the Netherlands over the weekend, certainly augmenting that argument. Will she push back on the pricing we're seeing in BTPs and Greek bonds today? We'll find out very shortly. This is Bloomberg.
This is Bloomberg Markets. I'm Rishika Gupta, and you're looking at a live shot of the Principal Room. Tune in to Bloomberg's monthly series, Chief Future Officer. The latest episode featuring Macy's CFO Adrian Mitchell is now on Bloomberg.com and YouTube. This is Bloomberg. Let's check in on the Bloomberg First Word News. I'm Rishika Gupta. In the UK, a no-confidence vote on Prime Minister Boris Johnson could come as soon as this week. A minimum of 54 Conservative members of Parliament would have to support a vote, and the Sunday Times reports that some predict the total is approaching that. One Conservative lawmaker tells The Observer, quote, "It is going to end in him going." Over the weekend, Johnson filled two key positions after senior aides quit. President Biden's top advisors are repackaging his economic message to the American public. That comes at a time when his approval ratings are sinking and his legislative agenda stalls in Congress. In the last week, the president has put more emphasis on growth in wages, union jobs, and domestic manufacturing, and he's giving less weight to those areas which are sore points with voters, which are inflation and the partisan strife over COVID. And the pandemic and China's restrictions to control it are damaging domestic spending. Travel and consumption during the just-ended Lunar New Year break was down from 2021's already low level. People in China made 251 million trips during the 7-day holiday. That is down 2% from last year and a 26% drop from 2019. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Guy.
Ritika, thank you very much indeed. I'm just looking slightly off camera because there's a live shot that's just come up of Christine Lagarde, the European Parliament, where Christine Lagarde will be appearing very, very shortly. We'll take her testimony. We'll give you an idea of what is happening here. But in terms of coming into this, there you go, there's the shot. But in terms of coming into this morning, what we saw was this huge pickup in yields, particularly at peripherals, particularly at the front end of the curve. That is now starting to roll off as potentially we approach this testimony here. So the Schatz, Germany's 2-year, is now negative by 1.6 basis points. BTP's, the Italian 2-year, still up by 2.7 basis points, but well off the highs. So coming back to the question of the day that Kayleigh was posing a little bit earlier on, who's in charge? Is it the markets or the central banks? I think we're about to see potentially this being tested. Let's bring back into the conversation Bloomberg's Christine Aquino. Christine, we're awaiting Madame Lagarde. She's going to be speaking very, very shortly. We did see this big move higher in yields earlier on. That is now fading. Do you think that is people just kind of backing off those positions, waiting to see exactly what she has to say?
I think that's exactly it, Guy. I mean, it makes sense for markets to kind of stall here a little bit in anticipation of what Lagarde is going to say, and specifically in anticipation of the possibility that she pushes back against these very, very feverish rate hike bets that we've seen in the aftermath of the ECB last week. And this is very much the ECB playbook in a lot of ways, you know, deliver quite a punchy message at the rate decision and press conference, and then see how that plays through markets, and then adjust the message and provide the nuance in opportunities that to speak in eventually following the meeting.
Well, Christine, obviously the message from Christine Lagarde in the past has been that it's not her and the ECB's job to close spreads. How much more could we see spreads widen out before they start to get really uncomfortable?
Well, Kayleigh, you know, in the context of the COVID era sort of levels, you know, we're still below those levels. We haven't taken out the March 2020 highs, for instance, in terms of the Italy and Greek yield spreads compared with Germany. And so that's certainly the first marker there. And then beyond that, you know, we're nowhere near levels that we saw during the key crisis periods in Europe. That would be around 2018, and 2015, 2016. So there is the context there in terms of the history. It's still quite far from where we are now versus how far it got during those key crisis periods. So something to remember. But definitely, you know, with the ECB potentially embarking on this regime change, and if they do in fact deliver a rate hike this year, which would be very, very different from the messaging that we got from them, could potentially be a game changer.
But the rate hike is just part of the story. The other part of the story is, in order to get to that rate hike, they have to start rolling off the QE program, PEP, APP, various different programs, but ultimately with the same end, which is buying up huge quantities of Greek bonds when it comes to PEP, less so with APP, but buying up vast quantities of BTPs, the Italian bonds. Just in terms of what the market had priced and what the market could be pricing if we get to that, let's call it Klaus Nott's Q4, sort of end of this year rate hike, what does the trajectory look like in terms of rolling off those purchases, and kind of how quickly could that be felt?
Well, Guy, I think it significantly speeds up the timeline when it comes to the ECB's various bond buying programs. We know already that they are meant to be ending PEP in March, but the APP program, which is the regular asset purchase program, originally I think the expectation for that was not until December. So that's going to have to change massively given their sequencing mandate. If they will deliver a rate hike this year, then the messaging on APP will have to start very, very soon.
Regular bond buying program. How far we have come now that we talk about these bond buying programs as being regular. Christine, thank you very much indeed, as ever. Bloomberg's Christine Aquino perfectly setting us up as we head into this testimony by Christine Lagarde. We will bring you that as soon as she starts speaking. This is Bloomberg. So we're waiting, we're watching. We are desperate to find out what Christine Lagarde is going to say today as she speaks before the European Parliament. We'll bring you her testimony very shortly, but we're also counting you down to the European close as well. So let's give you a quick update on where we sit with the price action right now. European stocks fairly well bid. Travel and leisure actually having a fairly solid day today. We're up by 3.5%, 465 the current price. Remember, the biggest push so far this year sort of coming out of the banks, the basic resources, energy. But you also want to keep an eye on the bond market. Now, the earlier move is definitely fading. BTP yields are still higher, but they are well off their highs. We're also seeing gas prices pushing lower here in Europe. Part of that is a reaction to what's happening in the States. Part of it, of course, a reaction as well. More gas coming through Ukraine. I wonder if that is significant. The bond story front and center. Christine Lagarde about to speak. This is Bloomberg.